Welcome to the deep dive. You've likely been seeing sources on income protection, financial planning. That's exactly what we're getting into.
Yeah, and our mission today really is to understand the true value of your income and
Wow.
maybe the risks it faces that we don't always think about.
Right, because we focus on, say, investments, maybe property,
Uh-huh.
but that income stream itself, that ability to earn, that's often the biggest financial engine we have.
It really is. I mean, think about it. Someone making, say, $100,000 a year over a 30-year career, that's potentially $3 million in earnings.
3 million, that's a massive asset, and yet we don't always insure it like we would, a $3 million house.
Exactly. And that brings us to the common assumption. Oh, my employer's group long-term disability plan, the GLTD, that'll cover me if something happens.
Okay, so let's poke at that assumption a bit. Is that employer GLTD really enough?
Well, it's definitely a good start, don't get me wrong. But it often has significant limitations. It creates what we call the DI gap, disability income gap.
DI gap. Okay, so what are the limitations driving that gap?
The big one is coverage percentage. Typically, these group plans aim to cover maybe 60% of your base salary.
60%, okay. But just the base salary? What about bonuses, commissions? For lots of professionals, that's a big part of their income.
Usually no, that's the catch. Bonuses, commissions, frequently excluded entirely.
Oh.
And then there's another layer, taxes. If your employer pays the premiums for that GLTV coverage.
Which they usually do, right?
Most often, yes. If they pay, then any benefits you receive if you become disabled, those benefits are typically taxable income.
Ah, okay, so that 60% of base salary isn't even what you actually take home. You lose some to tax.
Precisely. So after tax, you might only be seeing something closer to, say, 40% or maybe 50% of your total previous income being replaced, sometimes less.
Wow, that's a big drop. And I've heard high earners can run into caps too, right? Like a maximum monthly benefit.
Absolutely. There are often monthly maximums in group plans that can really limit the benefit for higher income earners, lessening that DI gap even further.
So it really begs the question, do you, the listener, actually know the specifics of your plan? Have you calculated what your own DI gap might be?
And our sources suggest, many people haven't really drilled down into those details. It's often just a line item in the benefits package.
Until you actually need it.
Yeah.
And that's when the surprise can be, well, unpleasant. Factoring in taxes, excluded income. That DI gap can be pretty substantial.
It really can be an eye-opener.
So, okay, if the group plan has these potential shortfalls, what's the solution? How do people bridge that DI gap?
This is where individual disability income insurance comes into the picture. These are policies you buy and own yourself, separate from any employer.
Ah, okay. So personal policies. What are the main advantages there compared to the group stuff?
Several key things. First, portability. It's
Yeah.
your policy. You change jobs, it goes with you.
That's big. No relying on the next employer having decent coverage.
Exactly. Second, customization. You can often tailor an individual policy to cover more of your actual income, including bonuses and commissions. You can even build in protection for future income growth.
Oh, okay. That addresses the exclusions. What about the tax issue?
That's another major plus. If you pay the premiums for your individual policy with your own after-tax money.
Then the benefits, if you need them, come to you tax-free.
Tax-free, correct. So $1 of benefit is actually $1 in your pocket, which makes a huge difference in replacing your lost income.
And I also understand these individual policies are typically non-cancelable by the insurance company, right? As long as you pay your premiums?
Generally, yes. Non-cancelable and guaranteed renewable. That means the insurer can't just decide to drop you or arbitrarily raise your rates just for you. That gives you real long-term security, peace of mind.
Peace of mind, yeah. So these individual policies are really designed to sit on top of or alongside whatever group coverage you might have, specifically filling that DI gap.
That's precisely their role. And companies like Diversified Insurance Brokers, which you mentioned reviewing, they specialize in helping people assess their group coverage, figure out their specific DI gap, and then find the right individual policy to fill it.
Okay, so wrapping this up, the core message seems pretty clear. Your income stream. It's not just paying today's bills, it's funding everything. Your lifestyle, your retirement savings, your family's future.
It's the foundation,
Yeah.
absolutely. And protecting that foundation, maybe with a combination of group and individual coverage, isn't really optional if you want true financial security. It's essential.
It's interesting how much time we spend planning investments derived from income, but maybe not enough time securing the income source itself.
It does seem disproportionate sometimes, doesn't it?
So, a final thought for everyone listening. If your income stopped tomorrow due to a long-term illness or injury, what would that really look like financially? Have you investigated your own DI gap? Maybe it's time for a closer look.
Definitely worth investigating.
Thanks for diving deep